Uh, you get the backwards hat gains today because you know, don't really know if I've showered today yet. We're moving. So, yeah. Yeah. Well, hey, at least you can't smell on camera, I guess. So I'm kidding. I showered. So how's it going, guys? How are we feeling? What's the sentiment check here? Good? Okay. Are you sure? No, it's good. It's good. So if you guys if you guys have been just kind of sticking with it and just kind of watching it every day like everybody else, and not bleeding to death, then that's good. I would say it's probably been one of the tougher tops out of like I don't know the last probably 10 years, just because it's one of those things that it just keeps rolling and rolling and rolling, and there's like just little incremental gains every day, and it's not like a normal sort of thing. So usually what happens, at least from my experience, is when you're really trying to figure out like like where are things going, what are they doing. I really think we're probably at more risk of a I wouldn't say blow off top, because I feel like everybody who's in the market, deep pockets and stuff, sure, you can make a lot of money in blow off tops, but they're very, very dangerous, because after the blow off top, you all know what happens. It never ends well. It's multi 10, 20%, maybe even 30 sort of correction. And that's typically what happens with those sorts of market moves. But when you're looking at a long-term consolidation, like a 2 to 3 month kind of span, and typically, the summer months, they get called like the doldrums of summer, right? But if you kind of look at it from like a seasonality sort of pattern, like it does make kind of sense that it's kind of grinding and not a whole lot of range here. But as Don posted that link today about the liquidity drain, and that's always typically like a seasonal thing that happens every year, whether it's like an account rebalancing or like a quarterly thing, not quarterly, month end thing, whatever. I don't really know 100% of the mechanics behind it, but I do know that seasonally you do see a dip, like in the first week of August, or potentially even spilling into like the second week, kind of depending on the timing. But I still think that you can't rely on that, especially this year, because when you do have these sort of market environment things where it may not seem crazy every single day, but if you've been tracking it every day, yeah, it's crazy. Most intense rally in 50 years. Who would have thought, right? So we don't want to, you got to kind of take it, a day at a time, right? And we're just trying to figure out like what's a good place to, like release long hedges or set stops or, set different orders. I have no idea what your individual like risk tolerance is or what positions that you guys have. And quite frankly, I don't want to know, because I feel responsible for it. But the main takeaway is that, when it's always darkest just before the dawn, right? I think I was talking to Neil about this the other day, where, it may seem like this, it's never going to stop, but it will stop. And in my opinion, probably pretty soon. But I've been saying that for a while, and I don't want to, look dumb yet again. So at least we can, at least I can joke about it with myself. But the portfolio is another story. So and just one note on that, like I really do believe that like markets can't go up for forever. The valuations are already incredibly stretched. There's people complaining, like professionals complaining about it, on like X and stock twits and stuff. And when the professionals start to complain about it, that's typically when they're advising their clients not to buy. So that takes liquidity out of the market. And then it's just the big players, playing tricks on each other in order to try and, get a leg up or whatever. But, what we've been saying since May pretty much is that the risk reward of higher highs, it's just not there. It's almost like you want to pick individual stocks that have a higher, that just have like better favorable chart patterns, something that's a little easier to read. So that's kind of what I wanted to just kick off with today, is that when it always seems like the screws are getting super tight on shorts, and what are we doing? Is this the right strategy? I've had a couple people try to convince me to flip long at this point, and that's kind of my indicator for things are getting a little extended. And not to say that they're wrong, because I mean, look at what's been going on every day. It's been going up. But again, like the main takeaway here is that it's patience, which is going to equal profit in this particular situation. I mean, you guys who have been with me for a while, like Mr. Nelson, you see me get out of some very precarious, crappy short positions before, and both times we're in profit. So
Yes.
this one's a little different, and I'm feeling the burn on this one because I'm mad that I closed my long hedges way too early and took a loss on it. That one stings worse than holding shorts. But I just wanted to say that have patience, guys. Yeah, I mean, obviously we can't move anything in the market, but we just have to trade with it. And I kind of feel like the bulls have gotten a little lucky lately. Nobody could have known we would have had like a you make new all-time highs, like especially after the tariff stuff, and then the aftermath of the tariff stuff. We're still seeing things like that. Like this week we saw a 15% tariff for the EU, right? So I mean that's not like we're removing a tariff, we're adding it. So it's essentially a tax that's going to be passed on to others, or just an inflated price. So I just think that it will eventually hit the brakes on the economy, and it'll show up in consumer sentiment. So keep an eye out for like the Michigan panels that come out like on those Fridays. If we do see the CPI head higher, then I do think the Fed's going to have more ammo to kind of keep rates higher for longer. So I guess kind of how that will impact equities is that typically you have that inverse relationship between yields and equities, but not all the time. Sometimes when they trade in tandem, that's when you can kind of tell that there's a like a disconnect in the market internals, and that's typically when you'll start to see sell-offs. So I'm kind of thinking that maybe August might be like we might see like a brief dip, maybe like a 3-5% sort of thing that gets bought up right away. So I would say, like, if you're trying to trade it, or if you're stuck short longer term, you definitely want to keep an eye on that. But if the longer term patterns are correct, that we've been forecasting out here, then we should see some sort of like 5-way down, sea leg, and maybe even have a lower than what we had in April. That would be nice. So we could get out of shorts, but then also have that opportunity to buy, at much better prices. Because right now, I mean, staring at, SPX 6400, I'm like just smacking my head, like, come on, like, can we have at least a little bit of a dip? You're like a 2% day for the bears. Like, they're all starving and emaciated right now. So, so anyways, all right, let's, before we get into that, or before we get into the charts and stuff, I had a request here for the to take a look at some of those NEOS funds. But other than that, anything anybody wanted to cover for sure? And I'm working on my talking so fast, so it's never gonna stop. So anything's fair game. Favorite colors? I don't know, whatever you want to know.
Yeah. MSTR.
Yes.
As a company, it sucks, and it's pure Bitcoin movement on it. Mm-hmm. But what do you think over the next month, 2 or 3, as far as it in relation to stable coins? I'm wondering if Bitcoin may lose some of its luster in relation to the stability that stablecoin is going to bring about.
Yeah, that's I think I want to address that right away. Let me pull up the MSTR chart too, so we have a good comparison here. It's a really good question, and something I've been kind of kicking back and forth here. Actually, Jake had sent me a DM about it, almost exactly the same sort of question here. And if you look at like the stable coins and kind of how all that's really been shaken out. There's only so much liquidity or only so much money in the market. You always hear these, we always hear these things from other people in the market saying, oh, there's, trillions of dollars waiting on the sidelines. They're all money market funds. And well, yeah, but like they've been in there for so long. It's like, it's that, it's the same sort of bias that I have where I hate to admit it's biased, but it is. It's like, it can't go higher, right? Because, reason X, Y, Z, but it can. Obviously, we've seen that. But with stable coins and things like that, there's really only so much dollars in the market right now that are comfortable with buying these sort of new asset classes. Personally, I do not like crypto. I don't think it's a good investment at all. I think it's just a speculator's sort of thing. But that's just, that's my opinion. It's not really based on, facts or science, right? So sometimes, there is that art and the science of investing, but the art part is really just kind of looking at a chart and looking at how new it is and the volume and just worldwide adoption, that kind of thing. It is becoming a lot more, I guess, worry-free, I guess you could say. Before, Bitcoin used to have huge 10, 12% swings in like a day. That's way too much volatility for me. It's great if you catch it on the upside or something, but yeah, it's like, good luck with doing that. So I guess the long story short here is that I think, like Bitcoin itself, it really has hit some sort of top here. If this pattern that you see here is not correct, so this ABC that we're showing here is like a longer term wave 4, and I'll kind of, let me zoom out here so I can show you guys a different view. So if I take out all these drawings and things like that, so you could say, okay, so we got, this is the end of a wave 3 sort of thing, and then this is a wave 4, which we could see something like this. I think that's more than reasonable. But right now, like there has to be some sort of pullback, and the reason behind it is just because there's not enough inventory. Like you get big players like BlackRock, and those guys are buying up all the liquidity here, but they're also dumping it too, and then spreading it out across these other cryptocurrencies and things. So when you look at this, tying it back to MSTR, I think that you might see just a general weakness. That here, sorry, let's pull up the volume. Back to Bitcoin again. I think you would see a general weakness as the prices just get higher and people don't want to buy. These are the people buying up here are the FOMO people, but you're also seeing very high volume, very high sell volume, and at these very specific levels. So this 1.382 here, this is, I guess, your theoretical maximum for a wave 4. So that's kind of, the end of a longer term cycle here. It's kind of tough to pinpoint what's going on with this, but it does kind of look like it. There is one more bullish run here that we might see, maybe up to this 131,000, and that would sort of complete a bigger ABC. But then that's probably probably it for a long time. I guess there's an important distinction of a major market top, and then there's the final market top for years. And I think that the difference is really between having a blow off top, or really just kind of bouncing around, making slight new highs for a couple of weeks and months, and then flipping back over, having a reasonable 10, 15, 20% correction, which you do see every 2 years, I'd say. And then you get more of a calm sort of buy up for the next leg up. And we definitely didn't see that after the tariffs. I think that a lot of people got trapped at the top or close to the top, deep pockets, and also the dealers. So we had a lot of the V-shaped recovery because there was just a lot of money stranded. So tying that back to MSTR here, I think that this is a pretty clear 5-wave up. It doesn't mean it can't extend and make some sort of here like an ending diagonal or just a little bit of a higher high kind of thing. I could see it making fools of me here, or make a fool of me here again with, let's say, a higher high, like a 500 or something crazy, but that would probably come with a blow off top, like in Bitcoin. So I guess, the main key here is just, as the liquidity kind of gets stretched out around some of the other, coins and things like that, I think Bitcoin has kind of lost its, it's still like the front runner in name status, but not necessarily longer term. I think that there's other coins and things that are less volatile, that are tied to different things, that it's just going to take a while for that knowledge to kind of permeate through the investor culture. And I don't think that it's going to happen right away. It'll probably be, a couple months, of course, like as people get used to more of these, Bitcoin ETFs, or not Bitcoin, like the coin ETFs and Sol and some of those other different things. So hopefully that makes sense. I know I gave a long-winded answer about it, but it's, I do think it's like a market strategy shift in general that is important, to at least acknowledge and, give it a little bit of airtime in the webinar. So hopefully you're not sorry you asked that question, and hopefully I actually answered it. So
yeah, I and the company itself is had issues before with corruption.
Yeah.
So I think it's a ripe sale. It's just, when is it going to be a ripe sale?
Yeah. And that's a really good point too, is that, all ships rise and fall with the tide. So when you see something, like an earnings review or an earnings, like on the screen here, where, oh, surprise, it's 575%, under forecast, or like, well, that's just terrible. You can't sugarcoat that one to investors. It's like trying to tell your wife you accidentally got into an accident or something because you were texting on your phone or something. But it's just like, I think that a lot of these companies that are holding assets, and they're really just valued because of what's on their balance sheet as an asset, like a Bitcoin or something. Once some air is taken out of the market, I do think that a lot of these companies will just evaporate with selling them down. And same kind of concept as like when bubbles get out of control, which I think we're kind of, I don't know if we're like quite there yet. We're pretty close though. Things have been a little nuts, especially with valuations. Nvidia is worth more than the GDP of Russia by like $500 billion, something like that. It's a lot, So there's a lot of these companies like MSTR and a couple of these other things that just won't survive long term. And it is a great short, because if you could short at 400 or 500 or whatever, whatever it's going to climb to, like that's just an awesome opportunity. But it's the timing that will always kill you. Take it from me and my portfolio. If you can't laugh, you'll cry, guys. But yeah. So to kind of round that off here, I really think it's a great point to bring up. A lot of these companies that are really just kind of zombies walking right now, and the only claim to fame that they have is they just hold a lot of Bitcoin, or whatever. And if they have corruption or whatever, people just kind of look past that, because they're just so fixated on hitting that buy button and the greed that comes with these bubbles, that fundamental valuations just don't matter anymore. And that's typical of a late stage kind of bubble, or late stage market behavior, as you guys have seen recently. So any other questions about that? I know I definitely went into that one, but I still thought it was a good thing to kind of surface.
One quick question.
Yeah.
If one wanted to hold a short for an extended, maybe even 6 months or 7 months in MSTR, thinking that it has the possibility to drop down in the low 100s, is the loss, on a leverage fund like that really that significant?
That's okay. That's another good question. So I use SMST, and it's a 3x leverage fund with that, but you can still hedge with the opposite, which is that MSTU. So you could mitigate like big losses with it, as long as your position size was reasonable. But if you also look at the chart and stuff, like it has retraced a significant amount of ground. and also with Bitcoin kind of where it is. I mean, yeah, there's a possibility here you could hit that B up higher. So if you wanted to ease in or something like that, I mean, the loss, might be significant right away if you didn't hedge, but longer term, that compounding power is what you're after. So yes, like in my portfolio, that SMST position looks like garbage, but that's also a very large position. It's it's like 5 units. I mean, it's very large for me. But that was also, because I wanted to add and stuff and kind of, improve the cost basis. But to me, that's going to be a longer term short. And I'm okay with part of the drawdown because I know that this thing isn't going to live for forever. And I think, I think about, what is the risk of like an ETF going insolvent? Well, if the bulls keep jamming it up, it's a possibility. But still, the opportunity here, I think, is pretty significant, and also like with the indexes, where there's not a lot of reward for the risk of going long much anymore. And if we do have a blow up top, you're better off just sitting in cash and waiting until the whole thing implodes. But yeah, I guess the long story short here is that there's lots of opportunities to like hold a short, and especially at these levels where it's it just made its second like local high here. So the I would say the only other risk for the upside here is maybe like this 480 kind of zone, just kind of looking at the symmetry here. But if you went in if you went in small and saved the other capital for, let's say, hedging, you could ride that hedge all the way up, cash it out for a profit, and then roll that all back into that SMST, and then improve your cost basis significantly. Hopefully that makes sense. That's kind of like it's the real way to do it if you're hedging properly and also being patient with it. But some people just like to trade it like every other couple days. But if you are interested in like a really long term sort of short play, like those leverage funds really gain ground quickly. So hopefully that answered the question.
Yeah, thanks.
Sure. All right, Mr. Greenberg, got your hand up.
Yes. So Ethereum, ETHA, and then they have these ETFs, or stocks that are like Master, but they're I think it was BMNR and SBET that are doing the same thing with that coin. What does that look like? Because it seemed like there's going to maybe a rotation going on.
Yeah.
And maybe I looked at them as possibly as a hedge against the other one.
Are you talking about, sorry, I'm not sure I understood the question. So you're
BMNR, Peter Thiel just took a big position in it.
Oh, okay.
And then there's another one called SBET.
I think I saw this one earlier. Ouch. Yeah. Okay. Yeah. Yeah, this is one. Alex is in.
You can't really tell anything from the charts of those, but if you look at ETHA, which is the actual coin, I guess ETF.
Okay. Yeah. Okay. So you're right. You can't really tell much from the chart, but I mean, this does look like a pretty obvious, like an ABC. And also the volume up here is what's been really, really eye-catching. If I draw like a quick bit on here, yeah, I just, I think 30 is probably reasonable for this, just to make like a new interim high. Like if I break it down just a little bit more, I could probably pick out a 5 here, something like that. So I mean, yeah, I think it's got a little bit of room to go here, but if you notice all the selling that happened right around like this 29, that's what's catching my eye here, is that it's got that like that parabola curve almost, where it kind of tells me that there's a lot of vested parties and trying to sell at those high kind of levels. So I guess like trying to use it as a hedge. You might not get much more out of this one unless you have like a lot of, deeper pocketed investors, start to like publicly declare their support and, stuff like that. To kind of hype it up, I guess you could say. But right now, yeah, like a new high, even if it extended up here and made a new high to like 31.57, I mean, that's not too much. Okay. Oh yeah, it's not bad though. 11.6%.
Yeah. Well, I know Alex took a position in both those stocks.
Okay. So the BMNR and SBET.
I don't think he took a big position, but he took a position.
Yeah. These just kind of scare me a little bit. Like I see these huge meme kind of jumps, and then I see just a face melter like the day after.
Yeah,
like this.
It looks like the VIX,
Yeah, exactly. Yeah. Yes. So, yeah. And if I look at this chart too, this one I actually think looks a little better. This one's got a pretty nice flag and it's already bouncing on the 50. So I'm thinking this one's probably got the best upside potential here. Just throw a little quick fib on it here. Yeah. So like 57, I think you could probably make the argument for if it stops moving. And if I trace it back here real quick and see what's we got here. Okay, so this actually aligns pretty well. I always try to take take note if there's like a convergence of fib levels on different time frames. So like now we see, okay, yes, this is the 2-hour chart, but you got to remember that algorithms are still using these levels as well, and they trade based off of fib levels and human programs, sort of things like that. So I would say, I don't think this one's that bad. Of all of them I've seen so far, this is probably the best setup, especially if you've had a chance to enter in down here as opposed to like up here.
I just bought it today. So
okay, so is that little blue bar down there? Is that you, Don?
Yeah. 22. Like around 22.
Okay, all right. Hey, that's not bad at all. That's great.
Well,
I might throw some in there too, but these still kind of make me a little worried. But maybe I just need to get over that. Maybe that's. I've been being told a lot lately that AI, I got to get with the program with AI. So,
well, it's a minuscule position.
Okay. Well, hey, at least it's fun though. Maybe get some lunch money from it.
Right. That's about it.
All right. So did I answer your question with that?
Yeah. Well, I was just interested whether there's going to be a rotation out of Bitcoin and into these others that might prop these up a little.
I think that's fair. I mean, one of the things I like to try to track as well, and if any of you guys hear anything about it, please feel free to share, like in the discussion channel, about like if you hear anything about, like, let's say BlackRock adjusting positions at Bitcoin, that stuff is very valuable. So that in combination with some of the dark pool data we can see, or options data, there's not a lot of like crypto options data out there. So it kind of, doesn't really give us as much of an advantage as something like an ETF would. Like, let's say, like MSTR, we're trading those ETF pairs. You can get some good options data on them, but something like this, I think, is relatively new, and there will be the infrastructure built around it in the future. But for right now, I think it's just kind of like a speculators, dice roll kind of thing. But I mean, I don't see any reason why, if you had the capital and wanted to do it, like you wouldn't throw some at this and like less at Bitcoin, I guess. So I think that's a fair point. All right. Any other questions? Or you know what? Let's go over the NEOS funds here. So let me pull up my other chart here. 1 second. I got all this crap open. Okay, so let's take a look at these funds here. So I have like a covered call list here that I don't think I've shared it. one second. No, I don't think I've shared it, but it's really just the list that we have here in the portfolio tracker. So the like all these different stocks and stuff. Yeah, I either have like a stock position in them, but I haven't sold any calls right now just because the volatility isn't there, and you're just not going to make a ton of money. And it's almost like you might lock yourself in when if you just waited a week, you might be able to get like an extra $500 for the same position, same strike, that kind of thing. So that's why I haven't really done any of that stuff. But what I do want to do here is kind of highlight some of these more like growth sort of funds. And I mentioned a while back that there's, like, I guess what I wanted to do was not just do like covered calls, but also work on just income or growth in general for these types of trades. Like the ETF stuff is pretty speculative. And, of course, since it's been trapped short for a while and the market hasn't really done anything, it looks pretty terrible, but it's, it'll improve over time. It's just, I hate to run a trading service, right, and then have a portfolio that looks like that. It's terrible. So I acknowledge it. So, but I guess I would say I challenge people to find somebody who wasn't like surprised by these the like new highs and continuing all that sort of stuff. And if you want to apply that to when is a good time to buy for these sort of these funds. So these funds are all high income ETFs. What they do is essentially track the they just track the ETFs underlying, like SPY, QQQ, IWM. Even though I don't really like trading the small caps, I think that like a basket of stocks and high income is reasonable long term. Trading it is tough, but if you buy and hold something like IWM, it might be all right. But I think short term it's a bad idea. But longer term, once we do get some sort of turnaround, I think that small caps will benefit from maybe a little more of an inflationary environment with like because most of it is regional banks, right? So anyways, long story short with this is they're all like options income derived here, and it kind of does look like we're putting in like a kind of head and shoulders pattern here, but I'll believe it when I see it, but if this one is kind of topping out around here, it would not be a good entry. In fact, it'd be probably the worst entry. But just one of the things I've been looking at is just the dividends that get paid from this. So, 50 cents on the share. I mean, that's pretty nice. So that's around like 10%, right? Annualized, I believe. Math on the fly. Don't do it. But anyways, like the dividend alone is really good. And I mean, it's kind of like your average S&P market return, not including the last year. So that's what, about like 10.4 over the last like 10 years, something like, or 40 years, something like that. And with all these sort of dividends, if you sell calls or, you sell puts and stuff, well, if you sell puts, you're not going to get the dividend, of course, but these dividends pay monthly. And that's what's really attractive about it, is that you do get this distribution. And if you are able to sell calls, that kind of thing, it doesn't really look like it moves a lot, and that's great. So the implied volatility is going to be a little bit lower, so you won't net as much premium, but you'll still get money off the shares and the dividends. So even if you only get a small, let's say market corrects 20% between, let's say, August and October, or maybe even 30%, something like that, you might get a nice kind of entry. I don't think it would dip this low. There's hedging and stuff with these funds, but let's just say we had a nice retracement here, and it kind of sets up like a wave 5 into like 2026, something like that. It's entirely possible, but if you were to buy in right around here, and then you kind of flip that script, so let's say you got price appreciation of like, let's say 17%, that gets you right back to where you were, plus that 10% dividend there. I mean, you're already looking at a really, really nice market beating return by at least 60%. So I guess when you're looking at it from this sort of perspective, you definitely don't want to buy right now, but that's why I've been trying to surface this and say, okay, well, these ones that track the indexes, I think these are really good because they have liquidity. they've got volume. Sorry, same kind of thing, but they've got they got these nice dividends, and I think that if you add a basket of these, so you just throw a little bit in each, like let's say you buy 100 shares or something like that, just so you could do one call sale, something like that. That would be just like an easy way to start, providing you wanted to do that and manage those positions with the calls. But again, like it could be a pretty decent moneymaker, at least just in general. So the other ones that kind of caught my eye here were they got this Bitcoin one that doesn't have a whole lot of chart behind it, but it's still it tracks Bitcoin. So I mean, I wouldn't want to like short any of these, right? Like these would all just be like buy and hold kind of thing. And sorry, my dog. Hold on 1 second. All right, there you go. But yeah, they would be like a buy and hold, and really just continue to grow that income. What I've done, and this is just like a personal thing. I mean, you don't have to follow me. I'm not a registered investment advisor or whatever. I'm just a guy that trades who wears a hat sometimes. Crappy jokes. But anyways, what I do is like with a 401k portfolio or something, you can be, like you can trade and take a lot of capital gains in there, and you don't really have to pay taxes in it as long as it stays within the account, or like a self-directed retirement account sort of thing, as long as you don't touch it. But what I typically will do is, like, if I have bills to pay, I would want dividend producing stocks or something like that, so I can stay retired, and I can get income every month to to pay the bills and everything, and then I can have that other chunk to play with ETFs and options and money that if you have a great year, you can just compound. But like if you're having a year, let's say like I'm having this year for 2025, yeah, there's some returns, but not enough to like sustain and like not have a concerned spouse, right? Like you want to you want to have a little bit of breathing room with that. So part of the shift is also to just kind of show you guys, like, over time that compounding returns and having a strategy like this that generates income can be pretty liberating, where let's say you're getting older and let's say you're considering like drawing on Social Security or something in the future, or you're considering retiring yourself, or you're already retired and you just want to figure out how to make the most money as possible without having to stress much about it. This like dividend strategy has been around for forever, and old Grandma Gladys with her her dividends, AT&T dividend stocks, and you can live off that. If you have $1 million worth of AT&T, you don't really care if the stock goes up. You just get the dividends. But it's sort of the same concept, I guess, is what I'm saying. So there's these different these different Bitcoins, and like, for example, there's a gold one here that I like. So this is, I mean, yes, metals are a little high right now, but that's just an example. Yes, Mr. Nelson. Your hand raised, sir.
Oh, can you hear me?
Yep.
Yeah. I was just, I hadn't heard of those before, those ETFs. I looked them up. QQQI is a ticker, and it is, the dividend is 13.98%. And the SPY is 12.07%.
Pretty nice, isn't it?
That's really nice.
Yeah. Yeah. And also, like, I know I said it earlier, but the real selling feature for this, for me, is like it tracks the indexes, and the indexes are really, they're just averages of everything, like you all know. So if we're starting to get, the heebie-jeebies about a bad economy or something like that, like you see big sells at these logical sort of topping points, you can still read the charts the same way that you read other tickers. It's just that this one's a little bit more in control. So the risk is a lot, or at least like it. How I kind of compare it is the 3x leverage ETFs are risky, because if you're not trading the hedges, like you guys can see in like my account, right? Like if you're not hedged, you can lose a lot of money quickly, but once the pendulum swings the other way, you can make a lot of money quickly. So it's like I didn't have the money to hedge because I went crazy with position size right away and violated my own rules. But That's all, going in the journal. But but the risk there is that there's a lot of fluctuation with it. And something like this is more of a calm, like calmer waters, inside like an inlet bay kind of thing, not on the ocean with all the waves. Plus it also gives you that income. So if let's say you buy at the top right here or something like that, and it just goes down, and you're like, ah, crap, I timed it wrong. We all do it. And if you, let's say you get another dividend, you can just buy more shares here. And then now all of a sudden your cost basis is like, something right there. So I guess the long story short here is that there's different strategies for different levels of risk tolerance. But if you really want to go for that easy street kind of, dividend, income producing sort of position, this is something that I think is at least, at minimum an attractive thing to consider. Plus then also the prospect of selling calls, but also just be aware that things are a little high right now. So I'm not going to go into it right now, but it's definitely on the to buy list. So I'll be, if we get pullbacks and things like that, I'll be easing in, maybe 100 shares at a time or something like that. I don't think that that's too bad, at least for, accumulating position size. And then, I'll also be trading or selling calls on it as well. So, and like if you already held it, now would be a great time to sell calls, but you're probably better off with the 3X ETFs on the short side. So to kind of reiterate, this is more of like a buy and hold. The leverage ETFs are more of like a trade or like, a short-term sort of trade. Hopefully that makes sense. I will stop talking there and ask if there's any questions.
Yeah, one question. From the step, because I've got some money that maybe in the next month or two that I'd want to put in something like this.
Okay.
But if the other part of me is saying we might be looking at, from a long-term chart perspective, a 10-year drawdown.
Yeah.
What's that going to do? If we look at a 10-year drawdown, a 10-year wave 5 down, what's that going to do to NEOs?
Well, yeah, that's a good question. I think, I think that these funds would probably do a little better, just because, like the high income is really just selling options, and the options market's always going to be there, unless it completely explodes, but who knows? But I think, there is a risk. Yes, I will say that. And the chart I posted today about, the long-term, like wave 5 kind of thing, I don't think we're like quite there yet. I think that we probably still have a little bit more excess, to go, but I still think that we're overdue for a correction, like a lasting one. And if we do have one of those, that's where I think that these will hold up a little better, because you can sell calls against them. So you can get that premium, and then you can reinvest. So you just use it as an income producing sort of position. So even if, I guess, let me use an example from my history. So I bought Tilray back, when it was, I don't know, like $12 a share or something like that, years ago. And at the end of the year, the shares are worth like $7 or something like that. So I lost, a little bit less than half, but I had sold calls at every, to every time it popped up. And I did them from like 2 to 3 week horizons, and the volatility was so high because it was, volatile stock, volatility is high. Sorry. But the volatility was high enough where, over the 1,000 shares, I didn't have a huge position, but it was like over the 1,000 shares I had, it was, it was like $1,000, maybe like $1,200 a pop, like every 2 or 3 weeks. And that would constantly, I mean, not every 2 or 3 weeks, right? Sometimes you would have longer term rallies or, whatever, but the income, I would always just buy more shares with, and I really wouldn't, I put it in the bank or anything. So before I sold all the shares were actually worth $7 on average. Plus I also had made all that income. So it's like I didn't really actually take a loss. The shares devalued by, almost 50%, but all that premium received, I just kept, reinvesting it in there, reinvesting it in the shares until I finally said, like, all right, this is kind of dead capital. Like, I want to do something else. But I at least was able to mitigate the huge drawdown that position would have had. Now, any normal sane person would have had a stop, typically like 7% of, so like if you have a loss of 7% or more, in a non-leveraged sort of thing, it's like, it's time to bail. But there are other options for the patient or the people who just want to trade it. So I guess that's just an example of if we do see some sort of major correction and you want to put money into something like that, I wouldn't be afraid because there's always going to be like bear market rallies, and you're all in, like, the news is going to kind of inform us as to maybe what might happen next. I think we'll see a lot of like doomsday stuff first before we'll see, like you said, like a 10-year sort of, 5-wave decline. And also on top of that, I just feel like we might actually end up chopping, for 2 or 3 years up at these, between like the 5,000 and 6,500 level for the S&P, or maybe 55 to 65. I just think there's a lot of like kind of weird market manipulation stuff going on right now under the surface. Can't prove it, it's just speculation, but just econ data and stuff's kind of not really reflecting what what I'm seeing in other sectors, and like especially housing's not really, it's a buyer's market right now, I can tell you that. We got a beautiful house. We had one couple walk through in the last week, and it's definitely priced. It's priced to sell. So 3 months ago, that would have been a completely different story. So either people are waiting for lower rates, or they're running out of money, or they're all getting laid off. Who knows? But we're not seeing that in like the unemployment numbers and stuff like that. But if we do see some of that materialize, word's going to catch on, that kind of thing. People are going to stop spending big dollars on like cars and things like that, luxury markets, things like that. So I guess to kind of summarize the whole thing is that I actually kind of think about these as like a hedge, but it's not really a hedge. It's like you're just using the money that comes from it to generate the cash to either improve your cost basis or to pay your bills while you're just holding it. Because if they do like a stock split or something like that, you'll still get a comparable dividend just because of the strategy of these sort of funds. Now, I don't know if there's, I know there's been other covered call funds that are very, they're very liquid. They've been around for a while and they have good returns. But I think that they're like almost like a basket of stocks, not necessarily like an index like these are. So I guess take it for what it's worth, but I think these are probably a little bit more, they would be a little bit less volatile. So yeah, hopefully that helps there. All right. Do you guys want to talk about the kind of where the indexes are at real quick? Or do you have any other questions about the NEOS funds? Silence is compliance, right? All right. Cool. All right. So I threw on some Bollinger Bands here for the Nasdaq. And I've had a lot of questions. I don't want to say they've been pointed questions. I would say there's always like there seems to be like a mild tone of irritation. I feel like it's just because people haven't been making money lately. I wouldn't say just like short in general. I'm just saying long and short. There's just been a lot. This whole grind up has been a little taxing to kind of sit through, because just when you think it's going to turn, it gets bought up again, and you're kind of seeing the volume decline every day on average, and you're like, okay, well, when is this thing actually going to flip? You take a look at stuff like, let's say the RSI, okay, and the RSI has been reasonably elevated, closer to this, the 75, or at least between the 70s and 80s, that's for sure, at least from middle of May. And that's incredible. I mean, there's like all these numbers here on the chart. What they mean is that it's exhaustion. And these are, let me check if this is weekly exhaustion. One moment, please. Okay, here we go. Weekly. Yeah. So weekly is important because weekly, that's like the big one. You can see here, like you got a nice buy signal, this blue one, sorry, it's B in the way. But this blue bar here, this is where you get that weekly exhaustion count from all the selling. And then that's where you saw it just take off and then gap up, and you're left holding your bag of shorts, that kind of thing. But we also saw that fire back in June, right? And I distinctly remember mentioning that. And then, there was some topping. You get a little bit of a weaker signal that fires, a couple of days before. But as soon as you get that 9 count, that DeMarc 9 count, where you should have seen some selling, that's where it went the exact opposite way. And if I'm not mistaken, there was some news that happened that day. I want to say like tariffs were adjusted or whatever it was conveniently timed. With all 3 of these incidents here, they happened with trickery. Like this happened, I think, over the hour where futures were closed. And then this other gap up happened. I can't remember, but it's, something happened. So during these 3 periods where these are major inflection points or major levels of resistance, the bulls had to essentially like jump in line or cut in line, whatever you want to call it, in order to get traction for more buying. And when these exhaustion counts fire, you usually take notice because they do mean stuff at the weekly level. You're kind of looking at like the last 9 count that we had, or the last significant one that we had. I mean, that was a drop of almost 17%, right? So it's not nothing. And also when you get one up here, this was a 3% day. So like if you can know that in advance, I mean that something's coming, or like a drawdown is coming. That's important. So when you start to see stuff like this, yeah, it can be a little irritating. So anyways, I bring it up just because now when I layer in the Bollinger Bands, and you see kind of what's been going on here, they've just been really tracking at that upper 2 standard deviation level of the 20-day mean. And that's it's incredible. It really is. I've seen strength before, but this doesn't seem like it's just strength. It kind of seems like there's a motivation behind what's driving the market. Like there's somebody, some people, some institution, whatever, that's driving up the markets. Just who knows, maybe because they've got some backroom deals or something. I wouldn't put it past anybody in these days, or something where people know that there's not going to be any major announcements that have deep pockets that maybe contribute to political campaigns. I don't know. I'm just speculating. It's not meant to be political. All I'm trying to say is that there is an environment that we're living through right now where you might have some people that have already been tipped off that, hey, we're all going to collude together and drive the market up to 23,600 and nobody's going to see it coming, that kind of thing. And we're all really long down here. We're going to make billions of bucks. I would love to be a fly on the wall in that conference room, but still, the main takeaway here is that there's been so much of this buying after we've had a weekly exhaustion count that it's very unnatural. And typically, when you see something like that, that usually indicates it's like the last phase of a major cycle. Like if you can kind of take a look back here, we've got a lot of these here. Let me move this. You've got a lot of these, like weekly exhaustion counts that kind of precede these, at least some sort of decline. Now you have some sort of like misfires here, but eventually you do get some sort of pullback. Same thing with some of these up here. So that's why I like to look at more of like the weekly than the daily, just because I feel like it's a higher probability of success. But when you start to look at, let's say, I want to say, so yeah, if you're looking at like December of 21 here, that's still not that good. So, here we got COVID, right? And we get that big old decline. But then I think the last time we had this sort of weird little blow off top thing was at the end of that first leg of what came after the COVID correction. So it's at least it's comparable. I mean, and then you see another sort of short-term run up here, but then after it still sinks below where that indicator fired. So it's like, if you can draw a line where the indicator fired, then you can see here that, all right, well, it's still sold down below when it did fire. So like down here too. And, it's just something you can look at when you're doing your own charting and stuff. But it's just something I like to think through where, if you do see a pullback right like this, my opinion, just based on what we just kind of talked about, is, and I'm sorry, I don't want to screw up this chart here. I got to fix it. But here we got that 9 count that fired, which is right at that level of resistance. We all thought was going to be like a triple top. Well, I mean, there is a case where even if it goes up higher, you could probably see it go back down here to test like this, about like the 2100 or the 21,000 range. So I'll pause there because I think that has implications. So what do you guys think about it? I'm interested to hear some opinions and thoughts.
Well,
everybody talk at once.
Yeah, I'm probably one of the oldest ones that follow you, because I'm 78, and I have seen, I've been through the techs and bubbles and everything from years ago, and really this market to me seems more like one of the biggest bubbles that's developing. I'm not saying that we're at it, but I think this is one of the biggest bubbles that I've ever experienced. When you combine the statistical data and the mapping with, and I don't want to get political because I'm a independent, but when you see the caliber of people that you've got in an administration, it's starting to worry me from a bubble standpoint.
Yeah. And just to, kind of clear the record with this, like I'm also independent too. I don't really care much about it unless it impacts markets. I just think it's all one big theater, whether you're for something or against something, it doesn't really matter. Give enough time in between, and labels don't make any sense anymore. So it's like, if it does impact markets, that's something worthy of note. So like, that's still fair game. And I do think that, you're starting to see an erosion of what used to be solid standards. So for example, like you never go after the Fed because they're independent and they have a job to do and they just keep doing it. And now we're getting political pressure to resign just because they're doing what they think is the right job. And that's not necessarily an opinion. It's just what we're all observing. So it's just, there's a lot of different like pushing that's going on in different areas of the market and different areas of, really the financial sector that's quite frankly disrupting, the last 50 to 70 years of order that has been, how the market works. So, like yields and gold, the relationship between them, yields and equities and things like that. And then also too, I think we talked about this in the last webinar where, all of the money that had been spent on everything, trillions and trillions of dollars, like that is true stimulus that is driving this market and driving these huge, these huge run-ups. And, every time I cite, how NVIDIA is worth more than the GDP of Russia, I kind of laugh a bit because the fundamentals just totally don't even matter. And it's just such a hallmark of bubble status to me that it's just screaming bubble. But the point is, you never know when it's going to burst, and it can go a hell of a lot higher than it is now. But I do have a lot of respect for the Shiller PE ratio. So you're seeing a lot of pros posting now about there's a lot of I don't know, like we're the second highest point we've ever been, that kind of thing, and the other highest point was in 1999. I think that this bubble is so huge that it's in everything now, and it's not just like you have a bubble in tech. It's now you have a bubble with manufacturing stocks. You have bubble with healthcare stocks. You have even utilities now. So like there's no more sector, or there's no other sector that is really like low and ready to buy. And that to me is a little bit more dangerous than in the past, where we've had these huge, just big bubbles, but they've been sort of localized. I did my, back in the day, I did my master's thesis on the housing bubble and the credit bubble of 2008 and 9 and stuff like that. And I mean, the signs were everywhere, but it's only really obvious in hindsight. But I think what's different with this one is that it's got a little bit of each bubble that kind of is rhyming, where you get this excess in tech, which is resemblant of which resembles the .com bubble. I think it's really more like a .com 2.0 sort of thing, and I think it probably is going to go a little higher before it does finally burst. There's going to have to be some sort of catalyst for it, but I think that if you do see a big day, like we get a circuit breaker down, like a 8% or 10% day, like that's the signal it's over. With 1999 and all the other bubbles, it usually like that first big drop down liquidates a lot of people, and then you get usually like 2 or 3 weeks of buying, like a dip buy, kind of a bear market rally sort of thing, and then they just launch it out the edge again, and that's where everybody gets, not just 20% of the people get liquidated, it's like 80%, and then the bulls kind of capitulate quickly with that. So I do think that kind of where we're at, it's confusing because you can kind of read the writing on the wall and see, yes, this is it's a lot. It's running a little too high. It's a little nuts here compared to PE ratios and whatever. And in hindsight, when it does burst, we'll be like, oh yeah, that's because they were calculating it wrong or they manipulated the data. Like we don't know. So the thing is, bulls have been getting really lucky, and I don't think it's like, it's like you try to be smart, and then you just get walked all over, and that's another hallmark of a bubble, is that you get total euphoria. Like if you look in some of these different chat rooms and stuff, there's just bull stampede all over anybody bear, and anybody who's calling for some sort of 30% correction just gets laughed off the mountain. So it's just something to keep in the back of your mind why you're doing this investing. And I think you guys have a incredible advantage though. So even though you can do trading and you can, take the longer swings, what you guys have is you have almost like news of the day of what's going on. And if you start to see, cracks in that, you can get out a hell of a lot faster than everybody else can. And you also know what to look for. So just the fact that you guys have signed up for something like this, or what I mean, like you're participating, already makes you guys like on the top probably 5% of all people who have money in the market, just because what things are about to crash kind of look like, or what a excessive bubble looks like. These are the types of things you can't really teach, you just have to live through them. And I was going to say before that you're only as old as you think, right? Or you're only as old as you kind of behave. And I just kind of think about it like, that life experience pays dividends down the line. And I do think that, when you're in hindsight, when this bubble has popped and who knows when it's going to happen. I mean, I've been net short for a while, just trying to, I don't want to time it anymore. It's not going to work. So it's almost like you got to just kind of roll with it until you get some sort of major sort of pullback. But don't be afraid to cash out and stay in cash until you kind of get more of like a sense of what's going to happen, because I think it's going to take a lot of people by surprise. It might happen all one day. Something stupid happens. Somebody says something stupid. Who knows? Somebody trips down the stairs up, who knows? But, these things don't really, they don't advertise that a bubble's going to pop on Tuesday. So you gotta kind of read the tea leaves there. And why I always like to try to, exercise caution with kind of where we're at is, yes, it is climbing the wall of worry, and I try not to be a worrywart about it. But when you kind of see how far things have gone, and you realize, I mean, like I kind of look at my job here as it's a big responsibility. Okay, I can't give investment advice or anything like that, but you're essentially following trades if you choose to follow them, or at least listening to things I say, and you have trust that I'm not an idiot, even though I feel like it sometimes. It's like you still have the trust there, which I have a tremendous amount of respect for, and I don't want to fail you guys, if that makes any sense. So why I always try to exercise caution is that you can be a very profitable trader while also being very cautious. It's just with being more, you just have to do more stops. More like if a trade goes against you right away, if it's a short, just exit, that kind of thing. Take the loss, move on, do it quickly, and then you can always make it up on the backside, like on a long trade or something. So I guess that's all I'm saying is that I try to exercise caution because I kind of get the same vibe, that it's a little extended here. It's getting a little nuts. And even though it can go up, a lot more than this, it could also stop pretty quickly. And then, you go on vacation, don't check your accounts for 4 days, and you come back and it's evaporated. So we don't want that. So anyways, that's kind of why, glad kind of talked about that, because I'm kind of getting the same feeling too, is that even though I've been kind of showing ABC down for forever, what it seems like, it certainly helped out in April, that's for sure. And we were able to play that one pretty well, except for when they did that big old short squeeze. Then I was dead. But so anyways, that's kind of it. Any other questions, comments, or concerns? Just wanted to I guess just say that there's probably a little bit more we can go here. Earnings next week are going to be I would think a little volatile. I'm going to be trying to keep an eye on like dark pool trades, some of the options volume, but most of like the Google earnings, and so Tesla we're able to call pretty well. The Google earnings I think we're just okay. Well, anyways, they still posted growth, but everything's priced for perfection. So long story short here is that even if we do have a little bit more to go, make sure you keep those stops and just kind of move them up as the market creeps up. But give yourself enough room so if you do get a pullback, yes, question.
UCO, SCO.
Yes. All right, let's take a look at that. Did you want to just look at oil first, or you want to look at the underlying?
Yeah, I got out of the long too quick. So
Okay.
I'm sitting there with a little loss on the position.
Okay, so well, this is the long here. Well, let's level set with the oil chart real quick. This is not my main chart, but okay. So here's kind of what I'm thinking we're gonna see here. So this to me kind of looks like a sorry, let me do the 2 hour. This to me looks like a pretty clear, like a corrective sort of ABC, but there's a 5-wave count within it. And, next should be some sort of ABC down, but what I'm looking for is like another pop-up here. Because it hit this it hit the 382, which technically means that this could be a wave 4, and we could see like one more lower low, which I would think here would have to let's see here, this line I would say at 6150 is sort of like the invalidation line of like if this instead ends up being like let's say a big old wave 4 with a higher high like this, then this will change into something different. We could see this instead, where now you still got your wave 3 within there, and now you've got this longer term dip. So this sort of invalidation line, this is where I'm targeting closing my shorts, but this pullback. See, this is what's weird, is it kind of like confuse you. So I mean, we're sitting. You got this 0.618, right here, and that's where I kind of think that this level's like the magnet almost of what we're going to see here in the next couple of days, maybe weeks. But I do think that if I clear out all this and just kind of do the old eyeball assessment here, it's been consolidating for quite some time, and I think that the bulls are going to try something sort of like this, where they want to try to breach this last little high, and then try to get back to where there's a little bit more buy delta. Here, let me zoom in. So like, excuse me, up here, you get a little bit more buy delta around like 70.1, and that would be a good point to exit longs. Like if economy is kind of headed downhill a little bit, there's going to be lack of demand for gasoline, oil in general. So, the prices might stay decently low. So, I mean, hopefully that answers some questions, but, these funds like UCO and SCO, they kind of track along with it, but it's not exactly 1-for-1. But if you draw, so something like this, like you got your 0.382. So, I mean, it's close, really close, I guess. So hopefully that helps when you're looking at like trying to make decisions with like, buying and selling of that stuff. Does that help?
Yeah, that would help for a point to add to it so I can liquidate later.
Yeah, so I'm kind of trapped in the middle right now, anyways, with this, where it does seem to me that the sorry, let me zoom in. Seems to me that this is like the new line in the sand here. This 6507, but you can see how much volume is here on the buy side, right at this point of control. So to me, that's like a long signal, where if we do see another drop, that's likely to just like test buy support, and then likely that's where the bulls are going to want to go get their money back. So they'll try to pump up the market, or we'll have some sort of Middle East flare up or something like that, where you can see this craziness. But I do know that the administration wants to keep the price of oil down, for the optics, and I don't know how they're really able to do that, but I think they've been able to do that. So I guess thinking about it from a long story, or from a like a trading point of view here, I think that the upside risk is really more news driven, versus like technicals and fundamentals. Like I really wouldn't be parsing like inventory reports with oil. I think it's just more of like a news driven sort of cycle right now with the markets, and that's what's going to be a little bit more of a little bit more of an influence versus like the technicals on this one. So I kind of hope we see something like this, where we see like a move down, and then like we just see a B wave here, and then we see like over time we see a return back to right around like the 71.5 level, and that you should be able to to profit from the longs and the shorts. So hopefully we see something like that. It'd be nice to have some cheaper gas, but can't get it all. I'd rather have a great short than to get cheaper gas, guys. That's all I'm saying. So, what other questions did you guys have, or is was that good for oil?
Yeah, I'll just input that, and I'm not being political, I'm just being factual, is that we've got an administration that is monkeying with statistics, which makes it hard for Elliott Wave to work, because they're taking a adjustable wrench to the numbers, and I think that longer term oil is going to go lower. It's just a matter of when is it time to add to a short to get out of it, because I don't think economies can support all these tariffs.
Yeah.
Thanks.
Yeah, I would agree. I think that normally that stuff gets it gets passed on to the consumer. And I agree. Like, it's only a non-issue if wage growth keeps pace. But if inflation numbers are being kind of manipulated, or if you think about it, the way the CPI is calculated is kind of ridiculous. People's purchasing power, at least a lot of them, is directly tied to how much the grocery bills are every month. Mine is like if I pay, I used to pay $180 a month, or not a month, $180 every time I go to the grocery store, like before COVID, and then after COVID, now it's like $320, and that's a significant price increase. Going to Costco, you see toilet paper that's $21 as opposed to $17, which was what it was back in January. Like, that's the kind of stuff that will eat away at the purchasing power that people have. And like I've been feeling it with my checkbook, and just in general, like I've been keeping my ears open at restaurants and stuff, and people are all talking about it. And eventually that's going to be, I also think we've seen that materialize in some of the consumer sentiment, where you're not seeing those big purchases of the $40,000 Polaris UTVs anymore, which would be sweet to have, but it's still, you know what I mean? Like, it's, and if you have a motivated administration to want to try to window dress everything, there's drawbacks to that. And the drawback is you're going to make the problem worse longer term. And if you keep pumping stuff, you keep pumping up the markets to make it look great, you're going to cause, that equilibrium to kind of be, off kilter there. And it's going to manifest in, larger price swings. So I would say, like, the Elliott wave stuff, I think it still does apply in the very, vast majority of a lot of these use cases. Same thing with like fib levels and stuff like that. Like, I haven't really seen a violation of major rules, I guess. Every once in a while, you got to have a little bit of a gray area. Like, you can't be so firm with your rules that you just can't acknowledge that there's going to be a change, or it's the wrong pattern, that kind of thing. Like, you have to be elastic with it. But I guess what I wanted to say about the whole thing is that I'm thinking it's more of an influence on just prices in general. So like, what's driving the bullish behavior is just that, we can kind of feel something's not right with the economy, but numbers don't really show that right now, except for big stuff like housing and auto sales. But that's typically the tip of the iceberg, right? I actually think that the unemployment rate is not reflective of what's going on. I was actually talking to Alex about this. Like, it just seems like a lot of my friends that were in tech, nobody can find a job right now, and they're high income workers, and they're not paying taxes anymore because they don't have the high income. And Alex is saying that, like, well, it's displacement from AI and things like that, and eventually they're going to find out that AI can only do 80% of what they thought it could do, and they're going to have to rehire some of these people and stuff. But to me, like, that would have happened already. That would have happened 6 months ago, because once you started those first round of layoffs with big tech, and they're doing fine. You see those balance sheets; they're awesome. But to me, it's like there's almost a stealth sort of malaise that's going on that we're not really seeing. Like, there's a lot of people being hired at McDonald's, but not a lot of people being hired at Google. So maybe that's why they're trying to offset some of this tax revenue loss with tariffs and try to take the focus off it. I don't know. It's one of those things where I can only look at some of the numbers that are provided, and I don't have a team of analysts other than Susan. It's awesome, by the way. She's doing some great work with options. But I don't have a team of analysts that can crunch numbers and stuff and kind of give different different degrees of opinions on these, or informed opinions, right? So that's why I like talking to you guys, because it keeps me sharp on these things, because I have to answer questions, and I don't like to seem like an idiot, I guess. So sometimes it works, sometimes it doesn't. So yes, Mr. Greenberg, your hand is raised. Oh, I think you went back on mute.
not there. Okay. Am I
There you
on
go.
now?
Yep, there you go.
Okay. Yeah, I just, Lutnick says they're all going to get jobs in factories when they build them in 5 years.
Did you see China was lampooning us? They did some AI pictures of Americans in factories, just like a bunch of overweight guys working on sewing machines.
Yeah, well, yeah, we can all get jobs in the chicken plants, that
Yeah,
they
the
take
chicken
the
plants, yeah.
immigrants away from.
That's what my son needs to do. He needs a job. I told him he needs to start. He needs to get a food producing job.
Yeah,
Something that something that takes a little bit of the cost out of the structure here in the family. But yeah, so I know what you're saying though. Yeah, so I guess that's pretty much it here. Unless you guys have any other questions, we'll probably wrap up here, and I'll have to post this tonight, of course, for everybody else. But yeah, I'm happy to stick around for another minute here if you guys got another question.
No, I'm good.
Okay. Yeah. So and also, guys, like don't worry about the politics piece. Like, it is what it is. Like if it influences markets, I think it's fair game. But you have to at least be objective about it. And I don't think I've seen anybody get bent out of shape. I think that the caliber of people in the service and stuff is pretty high. So we have some pretty intelligent people and stuff, and I think that even if they do get upset, they keep it to themselves, which is nice. But I'm a both sides kind of guy. Is it good for the economy? Is it not? Does it put more money in my wallet, or does it not? I don't really care too much about it. I just want to know what's gonna what is gonna happen longer term, and how can we play it, and make the most of our time here on this planet. So.
So we don't want to talk about sending people to death camps in El Salvador.
No, I don't know. I don't want to go. Let's just say that.
No, I don't want to go either. Right. Better keep your passport with you at all times.
That's right. Yeah. Exactly. Because knowing my luck, they'll have a payphone, but I'll be out of change. And I just can't make that one phone call back to the States at the embassy. And I'm just there for 20 years. People thought that I got abducted or something. Who knows? All right, guys. Well, let me know if you have any questions. Happy Friday. Make sure you guys take some time away from the monitor as normal, and maybe have a cocktail or something. Go get some steak at the store. Something. Do something fun. All right, guys. Well, we will see you on Monday or Sunday night, or if anything fun happens, or Monday morning, bright and early.
Take care.
All right, guys. Take it easy. Bye.